Okay, well, the long-term outlook for the London property market is positive. The main reason is because the population of London is increasing significantly. I think over the next 10 years it should increase by around over 1 million people, which is about 14% increase. On the supply side, because of the nature of the city centre of London, we've got historic buildings, many of them listed. It's difficult to get sites to build large-scale residential development, so you've got increasing demand and then you've got a constrained supply. So obviously these fundamentals are going to put pressure on long-term capital growth, which is good for investors. London recovered very quickly from the global financial crisis, and investors were seeing increases in prices of maybe 10 or 15%. Actually, the market probably peaked in 2014, and that was caused by the introduction of stamp duty, which made it more expensive for properties that were over 925,000. Relating to that, the effect of Brexit has not been significant. I think the Brexit result was a shock for the media and the property industry, and the immediate effect on the share prices for large builders and developers was negative. But because people didn't know what was going to happen, the share prices have largely recovered. But what the main effect in Brexit has had is that the devaluation of pound sterling meant that property is now maybe 15% cheaper for international investors. So any kind of doubt and uncertainty about the effect of Brexit has been more than compensated for by the fact that UK property is seen as being cheaper now for international investors. And international investors account for over half of all new purchases of new build property in London. Well, I think it depends. I mean, it was a surprise, and it does give uncertainty because it's a 2-year process before the UK actually leaves the European Union. And during this time, it started now, it's negotiations, and no one quite knows what the deal is going to be. Obviously, we all want access to the European market on ideally as preferential terms as before. And I think, obviously, the UK wants that. And I think at the moment, there's disagreement about how the terms will conclude. But actually, it's in the European Union, it's in their best interest to have a favourable deal as well, because the UK is, I think, the 5th largest economy in the world, and probably one of the single greatest countries for European countries to export to, including German car manufacturers. So I think there's initial posturing, but I think they'll realise that it's in everyone's best interest to have a sensible economic trade agreement, and it'll be of the benefit to the EU and the UK. Well, no one quite knows whether how soft or hard it's going to be, and I think the Conservative government are acting from a very hard Brexit standpoint, and I think it's a negotiating stance, and I think you'll find that their stance will soften and they will compromise. So I think they're starting off hard, they'll end up softer, and it's a negotiating game, really. In terms of the effect on the property market, I think it's difficult to say. I think at the moment that the national property market is slowing down, but this is in the context of several years of very high growth. So actually it's quite good for the market to have this cooling off period and to work out what's going to happen. But I think the fundamentals for the UK market and especially the London market are very strong because of the supply and the demand situation, and that's not going to change. Well, I think it depends on your own perspective to risk. At the moment there is uncertainty, but because of the uncertainty, the market is quite slow, price growth is slowing. So for maybe more brave people, they think this is a good time, because some people are maybe more cautious. If they wait for 2 years to see the result of the deal, if it's a good deal, then they've maybe missed out on the bargains that might have today. And especially for the currency, I think in terms of the Thai baht, the baht's now about 15% stronger than the British pound. And in fact, the current rate is almost a 10-year, equal to the 10-year low. So it's a historically good opportunity for Thais to invest. Well, actually, a lot of Thai individuals and companies have bought a lot of property in the UK recently, even before Brexit. There's some very high-profile examples of companies, including King Power buying Leicester City Football Club, and some Thai companies and investors have bought hotel chains, office blocks, major investments. And I think the interest, there's always been a lot of interest in Thai individuals in the UK, because a lot of people that buy international property, it's for their children to study, and a lot of Thai children go to school and university in the UK, and their parents buy them apartments. So that's been growing, and actually Thais are in the top 10 of non-EU countries who send their children to study in the UK. So that is very good for the property market. And I think since Brexit, property is much cheaper. The market has been relatively flat, which means the prices have maybe fallen in some prime areas as well. So actually it's been a good time for ties to buy in the UK. Well, there's various forecasts, and the one we've just quoted at the seminar was that according to the Land Registry and eMove analysis, that prices in London would increase by around 80% over the next 10 years. But I think probably the next couple of years will be relatively flat. And there is a lot of new supply coming onto the market. So the feeling is that once that gets taken up in the next couple of years, because a lot of development has been halted because of the uncertainty over Brexit, then the demand will outweigh the supply in a couple of years, and you'll start finding the large, significant price increases from a couple of years onwards.
80% is very optimistic.
Yeah. Well, there are various forecasts. I think if you Google long-term house price forecasts for London, most of them project high growth. But it's difficult to say. People didn't anticipate Brexit, and that happened. But I think I go back to the fundamentals of supply and demand. London is only building around half of the number of new build residential properties that are required for the population growth. And so there's the historic backlog, and even though London needs, I think, 42,000 new homes a year every year, it's struggling to provide 20,000. So they're not suddenly going to catch up in many years. So on the long term, those economic fundamentals means that the long-term capital growth should be strong. Well, I'd say for yields, yields in London are lower than Bangkok, but the difference is in London the vacancy rate is less than 2%, which means that your yield is effectively guaranteed. Whereas in Bangkok, the yield is probably going to be higher, but since the oversupply is much greater, the vacancy rate is much higher, around 15%, which means if you can't rent your apartment, your yield is zero. So it's much more risky. And also the problem with Bangkok residential market is that there is definitely a preference for Thais to buy new. So if you're buying an apartment as an investment, then you must have an exit strategy. So whenever you choose to sell it, whenever in the future, the older the apartment is, the less desirable it will be relative to the new opportunities. So I think you've got to question what is the capital growth going to be in Bangkok, whereas in London, for the reasons I've said, it's quite strong because of the fundamentals.